This is section 4 of 5 in the QuickBooks Online Certification Exam, and we start out with vendor credits. So let me first establish vendor credits is different than issuing a refund. So if you come over here to plus sign new, refund would be under customers. We have refund receipt. But under vendors where you'd find vendor credit. And there's a difference because when you're dealing with a vendor credit, that's a credit client, meaning you sent them an invoice. So you're either dealing with there's an open invoice out there that a client was not happy with one of the products and either they returned it or they said it was damaged and you're just going to refund them back. Not refund them, I'm saying credit their bill for that amount. Or it could be held if they've already paid the bill and applied to a future one. So that's what this question is kind of asking. But first I wanted to explain to you there is a difference between vendor credits and issuing a refund. So vendor credits are for returns of products or services or a discount received on account after a vendor has issued the bill and the client has recorded it in QBO. They post it as a debit to decrease the accounts payable because obviously now the bill is worth less. A vendor credit can either be applied to an existing bill or held as open and applied to a future bill. So you're going to have these two in your notes. These are the two things that could be done with vendor credits. The next thing we have with vendor credits is what are the two ways to access the vendor credit screen in QBO? One way is to go to plus sign new and vendor credit under the vendor column as I just showed you. Or the other way is if you have a business subscription, not QBO way, but a business subscription, you go to the expense center in the navigation pane on the left. You're going to go to new transaction and from the drop down, you're going to select vendor credit. Bank deposits. Bank deposit transactions are for any monies coming into a business that is not subject to sales tax or income tax, and that doesn't have to be matched to a sales receipt or invoice in QBO. Examples are the following. So I have two questions preceding this and following this, and I do want to say that I would have all of these in your notes because there might be other questions out there that are phrased differently that might include one or more of these following items. So these are examples of when you would use bank deposits. When a client receives funds from a loan proceed or a contribution of cash from owners. When the client receives a refund from a vendor and wants to record it directly against the expense account or to a refund received income account. When the client doesn't record income using sales transactions like an invoice or a sales receipt and wants to record deposits directly into the income account. When an employee reimburses the client's company and the client needs to record the reimbursement against the employee's loan receivable account. When the client receives a tax refund, this screen is where you record it in the tax refunds account. And lastly, when the client wants to group customer payments into a single deposit transaction, we saw that with the last PowerPoint, and that would be with that undeposited funds feature. So here's a question that you may see. What two scenarios are in which you would use a bank deposit transaction? So one is when your client wants to group customer payments in a single deposit transaction. And the other one is when a client wants to record an SBA loan amount received. So there was a question and they used two out of the several ones I showed you in the earlier video. So as I said, you want to get all of these down in your notes. Here's another one, just like the first question. In which three cases would you use the add funds to this deposit grid in a bank deposit? You receive a tax refund from the IRS, when an employee reimburses the company, and when a company doesn't record income using sales transactions such as invoices or receipts and wants to record transactions directly to income accounts. So again, make sure you have all those reasons in your notes. Next, we're going to look at QuickBooks Payments link. When clients create a new invoice with QBO's payments, they can select the way they'd like to get paid, either by debit card, bank transfer, or credit card. And then they would send the invoice via email to their customer. Now, when the customer opens up that email, they would then see and select the View and Pay button to view the online invoice, and then they could see the options to select within the Pay button. Clients receive a notification of the payment too. If they use the QBO mobile app, the notification pops up in their mobile device as well as they will receive an email notification of the payment. Clients without a QBO account can also pay through this option. The payment status is automatically updated in QBO. There's no need for clients to record the payment or the deposit because QBO does it all. Now I'm going to stop there before I even say this last sentence. The very first step QBO does is it records it in your received payment because this is an invoice. Then when it clears, it'll go and record it as a deposit. Now here comes the next sentence. If you wanted to have direct deposit, this feature comes at an additional 1% fee, so that is an option. What type of transaction is recorded when a customer pays via a payment link? Sales receipt. Now somebody gave this to me as a question and the answer was sales receipt. I did want to add to this or receive payment, as I just said, if you were using an invoice. No, sales receipt could be used for reoccurring payments, which before setup, the company must have written authorizations from that customer. So suppose you send something on a monthly basis to a customer and they pay immediately for it. That's where you can have a reoccurring payment link sent to that customer and they would pay it right away. Now, if there was an invoice, that would be recorded as a received payment and then later as a deposit when it clears the bank. Invoice pay options are only a one-time single use. So that brings us to this question. How many times are customers able to make a payment via a payment link before it expires? One time. Because remember, if you have a client that you're doing it on a monthly basis, that would be on a reoccurring basis. That link would be sent every month. But once that link is sent and it's used once and that's it. Journal entries. A journal entry is an accounting transaction that posts directly to the general ledger. Let's see where we do that. We go to plus sign new, and in the fourth column over under other, you will see journal entry. It's the first one down. So here are some rules regarding journal entries, and then you see I wrote here, write all 6 down, just as I did with the other one, because I've seen some questions, and the ones I have bold here are the answers to those questions, but you never know. There could be more in the database, and they could maybe use 1, 2, 3, or all of these. So make sure you have them all in your notes. So here are the rules regarding journal entries. Total debits must equal total credits in order to save the journal entry, because if they don't, it will not allow you to save. And if you see by default, as soon as you put a debit in, by default, it automatically will put that amount as your credit. But if you have 2 debits, then you would just go in and then you'd fill in debits in the second line, and then continue if you had a compound entry. The second one is you can't use product and service items in a journal entry. The third one is when posting to accounts receivable, you must specify a customer. There'll be a drop-down window to the right once you select accounts receivable, where you would have to select one of your customers. When posting to accounts payable, you must specify a vendor. Again, just like with accounts receivable, you'll see that drop-down window where you'll select a vendor. Now here's one in bold. Your client must use multiple account receivables. I'm sorry. Your client may use multiple accounts receivables and or multiple accounts payable accounts in the same journal entry. That'd be a compound entry. If you did the videos with me that I did for that class, you would have inputted one of those. And the last one is your clients cannot mark an amount as billable to a customer. So not in the journal entries. In the journal entry area, a client would not be able to mark it as billable to a customer. Adjusting journal entries. Something else I went over in the class and the chapters that I went over. An adjusting journal entry is an entry in a company's general ledger that occurs at the end of an accounting period before the company produces its financial statements. Only users with access to QBOA accounts can create adjusting journal entries. To mark a journal entry as adjusting, just enter the journal entry as normal and then check, is this a journal entry, is adjusting journal entry checkbox to let QBO know it is an adjusting journal entry. So here's your question. Which statement about adjusting journal entries in QuickBooks Online is true? Only accounting users can create adjusting journal entries. That'd be the answer. The pay down credit card feature. With the pay down credit card feature in QBO, clients can easily categorize credit card payments in the correct account, keeping their balances and reports tidy and accurate. Prior to this pay down feature, many of my clients use the transfer. I think we go over that in this video. So here's a question. To The pay down credit card feature can be found in which area of QuickBooks Online? You would do plus sign new from the left-hand navigation. So let me show you where that's at. Plus sign new, and then over here you would say the pay down credit card feature all the way at the bottom of other. Next question. Which option completes the 3 missing steps to use the pay down credit card feature? First, you would select the plus new button from the left-hand navigation, and then you would select blank. You would select pay down credit card. That's in the other column, which I just showed you, it's all the way at the bottom. Step number 2, you would select the credit card account that's being paid off or paid down. Step number 3, you would select the payee. So it could be MasterCard, Visa, or American Express if you did the class with me. The next step, enter the amount and the date of the payment. Next step, select the account the payment is being made from. So whatever banking account, your checking account, your savings account. And then the final one, the last step, is finally select blank. That would be save. So if you see this question with, and it'll have like drop down and several things to choose from, the first one you would pick is pay down credit card, then select the payee, or then select save, or just write all these steps down in your notes so you have them all in case they switch this question up. The next one, what are 3 benefits of the pay down credit card feature? It prevents miscategorization of credit card payment transactions. It provides easy to understand language for non-accountant users. And it prevents common errors that affect the company's financial statements. Transfers. When moving money between a savings account and a checking account, or maybe paying down a credit card, because remember I said a second ago, many of my clients still use transfer. They don't use the the pay down credit card feature. Some clients like to use paying down a credit card through the plus sign and then transfer. Or moving loan money into your checking account. Clients can easily set up transfers between these accounts in QBO. Here's a summary of the transfer functionality in QBO. The transfer screen is for moving funds between 2 balance sheet accounts. The transfer screen isn't for recording income or expense. The transfer feature is not for making transfers between a client's bank account and their vendor's bank account because it's only within your own accounts. The next one, a transfer is a 1-1 transfer fund. There's no splits allowed. You can't have more than, because you're only selecting one account and another account and the amount. And the last one is there are no customers, vendors, employees, or product services items involved at all with the transfer. These fields are not even available in the transfer screen. So make sure you have all of these down. But here are some questions that you might come across. Where should your client go to record a transfer? You would go plus sign new and transfer. We did one when we did that class, those chapters. Here's another one. Which statement would you say is true about the transfer feature? The transfer feature can be used to move funds between 2 balance sheet accounts. Now, managing receipts and bills. Many clients find managing bills and receipts challenging because, 1, they are physical items that can fade with time or that clients can easily misplace or damage. We're talking about physical receipts. Or 2, organizing and storing these can take up time and space. So instead, QBO introduced the receipt capture feature. So this receipt capture feature means that receipts and bills can be scanned, snapped, and then added and managed in QBO. This can be done in all subscription levels. So here's a picture of managing receipt bills. The receipt tab in the banking center is the home of adding and tracking receipts and bills. So you might have a question is, which tab in the banking center do bills and receipts appear after added? They would appear in your receipts tab. Once a receipt or bill is in the Receipts tab, you can review, edit, add, or match it. There's no question on that, but I would have that in your notes. So once a receipt or bill is then placed in your Receipts tab, you can do one of the 4 following: review, edit, add, or match. Now, once you get into this, we're in banking, and the 5th tab over is Receipts. And here are the 3 options we have as of 2022. You can either do a file upload from your computer, You can send it via your mobile app, your Google Drive, or you could forward it through an email to yourself. So those are your three. So there may be a question, so you need to have those in your answers. What are the three ways that you can upload a receipt in QBO? Either through file upload, via mobile app, or by forwarding email. Please have that in your notes. These are your three ways of managing or uploading a receipt into QBO. Capture bill receipts. Oh, here's the question, I guess. What are the three ways to capture bills and receipts so that they can be matched to transactions and added to the bank feed? File upload, forwarding by email, via the mobile app. Here's another one. With emails, bills and receipts with clients are forwarded the email to a customized QBO email address. The details are then picked up by an OCR technology feature that they have in QBO and added then to your QBO Receipts tab. So here's a question. Where would you navigate to enable the receipts forwarding feature? You'd go to your banking center, you'd go to that receipt tab, which is the fifth one in, and then you would go to forward from email. Note that QBO can only recognize one receipt at a time when they're sent in a body of an email rather than as an attachment. However, a client can include multiple receipts in one email as separate attachments. Once you've registered a unique email for that client, you can specify which users can email receipts by selecting Manage Senders. For users to send receipts, they need to be at least standard users with vendor permissions. So I don't have any questions on that, but I wanted to make sure you had this in your notes in case they add any questions. If you're taking this test, months after I make this video. Final note on receipt capture. Once bills and receipts are added, they appear in your banking center under For Review in the Receipts tab. Your client can then select the row to have a side-by-side view of the receipt and the data that has been extracted. They can also do the following. Select Review to edit the extracted information from the receipt. If there are multiple matches, selecting Review will allow them to choose which match is accurate. Then you would select Add if they want to create a new expense from the receipt. They don't see it there. They don't see any matches. And then the last one is Match. If they're ready to match the receipt with an existing record in QBO, you would select Match. So those are your three options. Note, if an imported banking transaction from your bank feed and a receipt are both in the For Review, so that same exact transaction is both in the Receipts tab as well as in your bank feed, then QBO won't suggest a match until you've selected Add and used it. Bank feed excluded transactions. Excluding a transaction in a bank feed involves removing it and not recording it in your client's QBO register. It may be a duplicate transaction, or it might be a transaction from a reconciled month from the prior month. In the banking center, you would select the transaction by, on the left-hand side, you'd see a checkbox, and there's a little check. You click on it, a little check mark will come up. So that's how you would select the transaction. And then a pop-up will have three choices. It's like this black screen. And it has three choices in that black screen that pops up. Accept, update, or exclude. Once you exclude it, the transaction will be removed from the For Review section and moved into the Excluded section. So here's a question. From the For Review tab in the Banking Center, how would you exclude a bank transaction that is a duplicate? You would find that transaction, you would select the checkbox next to that transaction, and you would select exclude in the banner. So I guess that's what they called it. I just called it a little, like I'm visualizing it, a little black box pops up. So I guess they call it the banner, which will say accept, update, or exclude. Undoing excluded transaction. If your client excluded a transaction in error, you or they can easily reinstate it. Back in the Banking Center, select the Excluded tab. Check the box next to the transaction that you want to reinstate. And then select the Undo in the dark banner that comes up. So here's a question. When an excluded transaction is reinstated, which tab will it appear under? for review. So you reinstated it, it goes back into the for review tab. Once back in the for review tab, then your client can add it, categorize it, or match it, and accept it accordingly. Bank rules. QBO allows clients to set bank rules to speed up the bank feed matching process. Bank rules automate the categorization of transactions by assigning or grouping them into transaction type, category, payee, class, or location. Those are your options as of right now, 2022. Rules can be prioritized, copied, edited, deleted, and exported. Clients can even create bank rules to add transactions to the register automatically, as well as to automatically split transactions into different categories. So here's the question. The following 3 statements regarding bank rules are true. Bank rules can automatically add transactions to the register. Bank rules can be prioritized, and bank rules can be copied, edited, or deleted. Reconciling your bank account. We did this as well in the chapters in that class that I posted. Reconciling accounts is important to ensure that a client's bank balances match with their financial data. It's best practice to reconcile accounts monthly to ensure that what clients have in their QBO reflects the actual income, expenses, and proper cash management. To reconcile the bank account for your clients, you need the bank statement, meaning your physical one or sent to you in PDF, if a bank feed isn't set up. Beginning and ending balances, that would be if you do have it set up, and I will look at in a future slide, we'll look at how you see that, the beginning and ending balances, and the total amount of withdrawals and deposits on their account. So you'd want to know the total amount of withdrawals and deposits on the account. So reconciling. Once the reconciliation is complete, a client can view, print, or download the reconciliation report for all periods by selecting History by Account. Again, that's something you could see if you look back at those chapters I did. And we went to History by Account when we wanted to save that reconciliation report, okay? And that would be found at the top right of the screen as soon as you finished, reconciling. And then you would select View in the Action column next to the right period. So you go to the right, when it says period, you go to the right date that you want to actually view it. If the numbers are off, then QBO may display "We can help you fix this." It'll be a little pop-up window. Or QBO will offer a link to run a reconciliation discrepancy report you could pull up and try to figure out the problem with. So in the chapters I covered, I showed how a client would reconcile their checking account as a business owner. Now let's look at as a QBO A user. What would you do? You would select Accountant Tools and then Reconcile. Where would you find that? Right over here, Accountant Tools, and then you would come down to Reconcile. Okay. From the Accountant drop-down, you would select the account you want to reconcile, and then the first thing you could do is select View Statements and see what available bank statements are there. The Reconciliation Discrepancy Report finds any transactions that were, and again, you want to have all of these in your notes, changed after they were reconciled, if the change affects the beginning balance of the account, deleted after they were reconciled, manually reconciled in the register by changing the reconciliation status to reconciled, which is R, or the last one, unreconciled in the register by changing the reconciliation status from reconciled R to cleared C with no status at all. Once you've resolved the issue within transactions and the total discrepancy difference becomes 0 in your reconciliation or your reconcile page, then you're ready to reconcile. QBO Smart's learning capabilities help you identify any rogue transactions that may be preventing you from reconciling. For example, it can help you identify if a transaction date is incorrect because the posting date was manually entered and has a clearing date that differs from the bank data. QBO will identify these hidden transactions and give you a link to display them. If you cannot find the error, then a QBO A user has the ability to undo a reconciliation. So how can a QBO A user undo it? They go to the Reconcile page. So we go to Reconcile. You'd go to History by Account in that top right. You'd go to the drop-down arrow and you'd select Undo. How does QBO use Smart Learning as a reconciliation tool to help find any hidden tools? The answer is it can identify a transaction where the transaction date is in a future period and the clearing date is in the statement period. So that was one of the few. That's an actual question and answer that came up, but I would have all of them in your notes in case they switch it up. Here's another question. Which users can undo a reconciliation? Only accountant users. Accountant users have the ability to undo reconciliations. Which report can provide some guidance on how to resolve transactions causing discrepancies when reconciling an account? That would be Reconciliation Discrepancy Report. Reconciling. The following statements are correct regarding reconciling a bank account in QBO. Transactions added or matched in the banking center are automatically marked tentatively clear. To view the bank statement, you would select History by Account. To begin the reconcile process, you need to enter the statement's ending date and ending balance from the relevant bank statement. By the way, over here, transactions added and matched through the banking center are automatically marked tentatively clear. You'll see a little icon there that identifies that. It's already been marked, it's been matched through your bank feed. What is the default filter that is automatically applied when reconciling an account in the reconciliation date dashboard? The date. The date is the default feature. Recurring transaction. Recurring transaction to QBO can be set up to manage pretty much any transaction in any workflow. So it includes sales, receipts, invoices, bills, journal entries, checks, deposits, or expenses. There's even an option to include unbilled charges and automatically send emails. What are two ways to set up recurring transactions? One is go to the gear icon and select recurring transactions, or on the bottom of any of the desired transactions that we have listed here. So on that page, so I'm in an invoice as an example, you would select the Make Recurring option at the bottom of the desired transaction. So you're in the invoice, and on the bottom, there's a tab that has different things that you can select. You'll see Make Recurring. So these are the two ways you can set up recurring transactions. Here's another question. Which of these recurring transactions can be used if an accountant needs to set up a monthly recurring prepaid expense? So that would be a recurring bill. Like, for example, if you prepay insurance to the Geico for the whole year, every month you would send a payment for that recurring bill. There are two benefits of using recurring transactions feature in QBO. What are they? There's an option to include unbilled charges automatically on recurring invoices. And also you can create recurring bills to automate the account payable process. That's what we were just talking about here. You can create a recurring bill payment, right, on a regular basis and automate the account payable process. Here's some more. Which of these recurring transactions could be used if an accountant needs to set up a month? Oh, I just said that. Is that it? Oh, that's our last slide. That was fast. I thought there was more information. Wow. Okay. That ends this section. So section 4 was faster than I thought. So we only have one more section left, section 5. And I'm actually busy this weekend. Maybe give me Monday. I'll get section 5 up on Monday. I'm hoping everybody's doing great in getting these sections completed. And this last one will be coming up Monday. And those of you who are following me should be certified by next week. All right, take care.